Hi guys, in this video we'll quickly go through trend trading versus reversal trading. They are fundamentally different. So let's jump right into it. Start with trend trading. So what is trend trading? Trend trading is basically trading with the trend rather than against it. So it's a simple thing. It's like surfing. So you surf with the waves rather against the waves. So it's as simple as that. So we know that a trend can be a uptrend or a downtrend, and in an uptrend, there is high highs and higher lows. In a downtrend, there is lower highs and lower lows. So let's just go to a very quick example. We'll look at Nvidia. So we'll look from this point of time to here. We can see that it is in an uptrend, so higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So it is clearly in an uptrend within this range. So let me just draw that for you. So within this range, it is in an uptrend. So what we can do here is we can get in at those higher lows and then keep trading until the trend reverses. So let's just go to a quick example. So let's say we got in somewhere around here, and what we're gonna do is we're gonna keep holding until the trend reverses. Basically, what we're doing is we are quitting the trade only when it makes a lower high or it puts in a lower low. So let's just go through this. So we did get in here. It's made a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and then here it put in a lower high. So that's where we could quit the trade. So we would have made a significant amount of return over here. So that would have been 483%, which is quite amazing. So on the flip side, let's say we are trend trading a short-term bear market, which is where the sellers are in control. So let's just go through that as well. So what we're looking at is this area. So let me just quickly draw that. We're looking at this area over here. Okay, now let's look at the flip side of the story where we are shorting, where it's putting in lower highs and lower lows, which is a downtrend. So we are trend trading in a downtrend. So we can clearly see it put in a lower high over here, put in a lower low, lower high, lower low, lower high, lower low, which is good. And then somewhere around here, we can see that it basically reversed. It's putting in a higher high over here. So what we can do is we can enter our short position somewhere around here because we can see that the 200 MA acted as a resistance point. Let's say we got in there, it put in a lower low, lower high, lower low, lower high, lower low, and then here it put in a higher high. So we could have potentially quit the trade over here. So that would have been a decent return of 52%, which is quite good. So the main thing is we are trading with the trend. We are not going against it. If it's a uptrend, which is higher highs and higher lows, we are getting in at those higher lows and trading it. And if it's a downtrend, once again it's putting in lower highs and lower lows, so we are trading with the trend. Once you put those lower highs, that's where we get in and we quit at basically support levels or when the trend reverses. So that is the key thing about trend trading. It is the best thing to making money because it's quite simple and it is the obvious choice because a lot of people are trend traders, and the higher the number of people trend trading, the higher the chance that you can get a cut out of it as well. Because let's say everyone is buying in an uptrend, everyone's basically going to win unless you are shorting because it is primarily in an uptrend, but you gotta be very smart with it. And moving on to reversal trading. So reversal trading is basically going against the trend or trading within a range. So Apple is one of the best examples that I could give you. We can clearly see that the red area is an area of resistance and the green area is an area of support. So with reverse trading, what we are doing is we are trading against a trend, especially from areas of support and areas of resistance. So in an uptrend, which is basically over here, we can see that it is uptrending. We are reverse trading. So what we can do is we know that there is a resistance area over here. So what we're going to do is we are basically getting in. When the price is uptrending, we are getting in, and we know that this area is a potential and a key area of resistance. So we get in here and we take profits before this area of support. We are going against the trend in a reversal trade. That is the simple analogy behind it. We are reversing, or we are going against the trend. So we'll give you another example. So over here we can see that price has been selling off, so the trend is a downtrend, but we know that over here it is a area of support. As you can see, we've already drawn that, so let me just get that fixed. So over here, basically price has been selling off, so it's a downtrend. Price has been selling off, and we know that this area is a major area of support, so we are reversing. It is primarily in a downtrend, so what we are doing is we are taking a trade against that trend. We know that it is reaching that area of support, so we get in once we have confirmation that the buyers are back in control, and we get out before that area of resistance. So it is as simple as that. We are going against the trade when we are reverse trading. This is a bit more complex, and the chances that you have of making a profit in reversal trading compared to trend trading, it's a bit lower, because reversal tradings will not happen at all times. You cannot guarantee that, but in trend trading, the chances that you become profitable are a bit higher. So I do recommend trend trading, especially for beginners. And reverse trading, that is, I mean, you can do it, but you just gotta know where support is, where resistance is, where overbought levels are, where oversold levels are. I've basically explained that in some of my previous videos. I will link them down below.